Welcome to the Rose Show podcast.
Thank you for joining us today. I'm Rosanna, your host, and I am here with Mando of Mando Trading, an options trader and investor like me. And we have a few others that may be speaking as well. So, Mando, let's begin with you. What are your thoughts on the market recently? What's going on? Everything's looking great. What have you been up to?
Yeah, well, it has been great for those bulls. Up until about an hour and a half ago, it seemed like stonks were back and everything was going back to the moon. But reality to me has to set in at some point. I know that inflation, according to the data, has been kind of pulling back, but I would not be surprised if this isn't the last of what we see from inflation. And I don't really know what your thoughts are on that, but I don't know. I think this is going to be a very stretched out and long process. And although it's been a year at this point already since everything started to come back down to earth, I still think we have a long road ahead. So I actually was trimming a bit of my long-term positions today in my little Roth DCA account that I started messing with back in June. I'm ready to reload. So if the market wants to go back down, I'm all for it.
Love it. Well, I'm a long-term investor as well. Been doing this quite a long time, over 25 years. So I've seen quite a few bear markets in my time. And I got to tell you, I took profits today. I took profits off of my trades as well. And I'm an options trader, short to midterm. So I took profits there and I took profits in I just trimmed, I reduced position sizing in some of my longs as well. I could go into macro. We could talk for hours on macro. I've been having a lot of macro podcasts lately. I have an economics background, and I'm an MBA as well as being a CEO. I'm in the business world since forever, I swear. But I think inflation is very sticky, and I don't foresee, in my opinion, going back to the 2.5% anytime soon. Anything's possible, of course. Highly unlikely, in my opinion. I think that services are a function of employment and wages, and we have a very tight labor market. This will take time. I see it from the business microeconomic side as well, being executive officer of a manufacturing business for now this one by 18 years. It's one of my businesses here in New York, and a lot of issues, high cost of goods sold, and as well as operating expenses, a lot of new expenses. Margins are compressed, so earnings are compressed, and we saw that with the earnings after hours today. Amazon, Apple, and Google all missing. Amazon, I think, beat on revenue, minor though. However, I always look at the guidance, and I didn't have any time to look at Google and Apple, but I did look at Amazon's guidance, which in my opinion was not so great. And so, guidance is most important because we're forward looking for, the market. It's future. We're trading based on the future. So it's about market reaction. So far after hours, I mean, we're not going to go by after hours market action as much as tomorrow, but so far it doesn't look too great. I do think the market ran ahead of itself. That's my opinion, based on the fundamentals. I think that with the equity risk premium, risk-free rate being over fours, it's a little expensive, the SPX, and prices and valuations, in my opinion, would probably come down. But the market does what the market wants. So I'm happy on the upside. Been riding this, and but I did take profits today, like you said. I did the same, and I cut back on positions just in case. Hey, risk management is number one, and I rather take my profits. Don't want my green to go to red, and better to be safe. And that's key in this market. We've had a tough year, over a year, and so it's better to be safe. So agree on that. Now, you tweeted something of interest. I think it was yesterday. You said You were looking at SPX 4180, and I think we went right to that level.
Oh,
Is that correct, Mando?
yeah, so it was actually ES. So I do all of my charting and finding imbalances using ES, which is the S&P futures. The reason why I do that is obviously, I learned from someone who taught me that, but the main reason behind it is just based on if you look at SPY or SPX, you're going to see a lot more gaps, and uh, you know, that's just a part of, their times that they're open. But in terms of futures, they're running 23.5. So even though the movement might not be as drastic or anything like that, you're still going to be able to identify some key levels within that price movement just based on it being open for Asian opens, London opens. So that's why I like to use ES for the chart. And honestly, I wish the numbers matched up perfectly, because it is definitely a pain. When I'm saying a number and then somebody looks and it's like, oh wait, SPX is different from ES. What is that? What is the difference in number? And it is kind of frustrating. But yeah, no. So like I'm solely using ES in terms of my S&P charting.
Very nice. So what levels were you looking at that we were going to go around? I think you were bullish the other day. You had made some great calls, I have to say. And what are your thoughts now? I mean, besides the earnings, looking at the technicals, because I see you're a great technical trader. What are you looking at? What are some critical levels and indicators that you use when you're looking at these charts?
Yeah, so to be honest with you, in terms of like using, indicators in order to trade and things like that, when I tell you I've literally tried every single one you can think of, like I have literally tried every single one possible. And it helped, of course, along the way, and I have been profitable for years now, but it it was always like more of me kind of being like a cowboy in a sense with it, where I would shoot, and if I hit, it was great. And then if it didn't go my way, I'd give a lot back. And really, it started towards the end of last year, where I was like, man, if I just didn't give back any like stupid trades where I got stopped out, like, or at least maybe was a little more disciplined in my approach, I wouldn't give them back. So honestly, I don't use any indicators on my chart other than volume, and I just study candles. And what I do is I look for imbalance candles, and from there I just draw little boxes, and as price reapproaches those imbalances, then that's where I make my decisions based off that. So if you see, I'll try to use like FinTwit terminology, but if you see a huge knife candle, oftentimes that next candle following is going to retrace a hair. And then I go from the wicks, I draw my little shaded rectangle. And if it was downside, I would code that as a red or a bearish imbalance. And as price reapproaches that bearish imbalance for the first time, oftentimes you'll see that it does actually reject that level. And that's where I look to add to my positioning. So today, I'm just booting up my computer again here. But we actually broke through the other day. I think it was on Tuesday. Yeah, Monday we dumped. Tuesday we came back strong. And we actually had an area at, yeah. So 40.97 was a key level I was looking at. That was a previous high, or an area where there's excess liquidity. So when we get to those levels, I'm using that as, yes, we will break out, and the technical trader will say, oh, it broke over this key point. This is where I'm going to get long. And oftentimes, if you go back and study price action, you'll notice that, yes, we do break above, but it does turn out to be pretty short-lived. We did that again today, over 41.83. That was a previous high from, I believe, December, maybe. But whenever it was, we got above it, and we knifed down pretty hard. And that is just something that I have in my tool bag, and something that I'm looking at on a day-to-day. I try to kind of fade the retail mentality, or using a lot of the common retail indicators. just never really, do they work? Sure. But oftentimes I just noticed, like, I'm basing my whole trade plan off something that could fake breakout. Like, to me, that's just, um, it didn't sit well with me. I'm like, wow, like I'm basing this trade off of that indicator, putting substantial amount of money into something that, has a potential to not work out and fake breakout on me. Like, I don't know, it just never sat well with me. So, the strategy that I'm rocking with now, I've seen it's given me much more, um, not only, success rate, but also it's given me a lot better of risk management in terms of my trades, where I have a defined level that's really not far away from my entry point. Of course, getting stopped stinks, but it's better to get stopped close to your entry than, letting it run and getting caught in quicksand and hoping that, your next level is going to catch and give you that move that you're looking for. Because I've been there and it's not great. And I always hate kind of getting stuck in that. So, whatever I can do to avoid that is great with me.
That's awesome. I'm all about simplicity. I've been doing this for quite some time, so I agree with you. You always got to find your own system, what works for you. But if you looked at my charts, you'd be like surprised at how simple they are. Just use volume as well. Moving averages are very important to me. The 21-day, I like using a lot, and the 50, of course, and and others. But keeping it simple is key. And if a trade works against you, especially in this market and the way it's been lately, it's better just to get out. And that's how I've been. I move fast, and better than just to hold it. And then taking profits. I mean, to me, maybe I'm just, I'm very much about risk management. I've lost money in my time, and I've made money, and I've learned the hard way. We learn from our mistakes, and you know, I I just think it's better to err on the side of caution. And even though this rally's been great, I took my profits today, and I really believe in making sure my green doesn't go to red, and that's a big one for me, because I've had that happen to me, and letting winners run has not worked in this market. So long term is different. Now it's all about time frame. And that's what I like to start talking to you about, because you're an options trader as well as a long term investor. And I thought that was a great combination. I mean, I'm the same way. So let's talk about time frame. So options, let's start with the options trading.
Yeah.
So what time frame and what type of options trading do you focus on?
Yeah, so I'm at this point, I'm exclusively trading the S&P, 90% of that being SPX, the other 10 being SPY, but I also do trade futures a little bit. When I first started trading futures, I didn't have as much success because I think it was just me trading like the after hours market, and it was much slower, and it just didn't really work out for me great. And of course, I entered it and I was smart about it. I didn't go too crazy with the amount of money I was using or anything like that. But I've been actually trading futures intraday at some points as well, and it's all the same. It's good. I like it a lot, and I like how it can connect directly to your trading view. So it's like super simple on the computer. Boom, punch it in, and then I can go to lunch or eat something. But in terms of my trading and time horizons, another thing that I noticed, and I may have just been learning on the run, but I used to trade a lot of 0 day till expiry. And then I noticed that I would get the move oftentimes, but the problem would be that, when you're trading a 0 DTE with, 2 or 3 hours left in the day, those contracts, they better get going quick, or, you're toast. So, this past, I don't know, like 2 or 3 months, I've really been focused on grabbing an extra day. So all of my SPX trades are essentially coming 1 day till expiry. Might not be the smartest decision for someone who's still kind of finding their way, but I feel like I'm at a point now where my success rate can kind of speak for itself, and I do have that confidence to go a little bit shorter dated on my trades where I'm not going to get burned. I also know I totally respect my my stops. I'm not going to let something completely, kill me. If I'm trading SPX, I'm also not going in with nearly as much money as I did in the past. To me now, maybe not. Maybe I was a lucky COVID trader. I've been in the market prior to that, but not with any substantial money. When I got going in it, I was in grad school. I was, just I was working a pretty tough job, and I didn't want to do it forever. So I was hoping that maybe just investing, maybe that could trim 10 years off of my, my work sentence. And that's what kind of led me into right when COVID, when, everything dumped off, maybe a smart decision, maybe not. I put in a lot more money from me working for those 2 previous years. And I made quite a bit of money during that run. But thankfully, I had good mentors who kind of told me, like, look, if you think it's going to be this easy all the time, or, seemed easy, you're totally wrong. You need to learn how to do this like and almost run your trading like a business, and become like a machine, in a sense, where you're not just going to be throwing, substantial amount of money out there just to, leave it to the fate of the market to decide. So now I'm really just trying to hit, like, specific, whether it's a weekly goal or monthly goals, quarterly goals, like things like that. And, I don't need to try and be the guy who's posting $30,000 a day, because, those people who make that, it's great. And I'm very happy for people who can do that. But I just know me from my past, I'd have a day like that, and the next day I'd give back, 50, 60% of it. Then the day after that, I'd give back another 10, 15. So for me, make the money that I need to continue living this lifestyle, and that is more than fine with me.
That's great. Yeah, I mean, they say, I think you make it's 50-50 when you're right and wrong. So, it's important when you know that trade is going against you, to size down and to pull out. And yeah, you can't expect to make that same money every day. It's challenging, especially in this market. I mean, 2020 was a anomaly in itself. There were opportunity costs for not investing in the market. Every dollar you didn't invest, you were losing,
Right.
because everything went up. It was a different world, and it's difficult to make money. I mean, I was investing before 2000, and I remember the .com, the .bomb, whatever you want to call
Right.
it, and 2008. That was devastation. I mean, people really, there was, the morale was so low in 2008. Everyone thought the world was over.
Right.
And you know living through those times and experiencing investing then, just gives you a little bit of a different perspective. But you know what, human nature always takes over. So we need to be disciplined, patient, and consistent. And I always say that, your trade, at the heart of your trades is decision making. And you need to, it's not about not having emotion, and that's very important that people know that. We're humans, we have our emotions actually help us. It's about controlling our reaction, our impulsiveness from those
I
emotions.
couldn't agree with you
And I
more.
could do a whole course on.
Could not
Yeah,
agree with you
thank
more.
you.
I mean, you
I
hear so many people say, "Oh yeah, like you
Yeah,
can't have any emotions." Well, I mean, unfortunately, we're not robots, so we do have to deal with this. I mean, the best way to put it is just to being able to control them, in a sense. And I think with time, it does get a lot easier in terms of being able to emotionally control yourself while you're in a trade, or you're sitting in some sort of long-term position. But yeah, no, I totally disagree with that robot mentality. Of course, you want to. That would be nice to trade like an algorithm, but unfortunately, we are not. So
yeah, exactly. And actually, emotions. I studied behavioral economics. I actually just completed another graduate
I saw
course
that. Congrats. That's
program
awesome. Yeah.
recently. Yeah, thank you. At Harvard, it was an amazing leadership decision making. And actually, there's someone who did the same program that I did. She coaches. She's the one who they modeled the character Wendy from Billions or Billion or something from.
Oh yeah.
Their name is Denise Schultz. She went to the same program. And
Wow.
so it's a different way of looking at decision making. And it's really amazing. It's important to know yourself, but just know that overconfidence is the mother of all biases. And that is the bias that will cause you to make your greatest errors. We have overconfidence, and that happens in trades all the time. And so there's a whole different thing we could go through, biases, heuristics, and decision making. But all of that boils down to one thing, and that is knowing yourself and being fully aware of where your weaknesses are and your strengths, and to have a trading plan in place before you execute the trade. Because once you're in the trade, your emotions they can get the best of you. And it happens to me too, happens to everyone. When you see that green flashing and you see that stock continue to run, or the other way around and seeing that red, you get those impulsions, impulsiveness to do something you may not should be doing. So it's important to have that plan in place.
Oh, for
So,
sure.
I want to go back to options trading.
Sure.
You mentioned SPX, and I also I think XPX is a great trade, and for short term, there's actually some great tax benefits with
Right.
SPX over SPY. You're probably familiar with that.
Yes.
You get more long-term gains over that. Excellent. Yeah. Well, this isn't tax advice for anyone, but
Right.
I have a disclaimer that's going to go
Oh,
out
good.
with the
All right.
podcast.
Yeah,
No
no, that's
worries.
what I was thinking, right?
Yeah, no worries about that. It's a whole disclaimer with that. No, this isn't investment advice or financial advice. But so when you wow, zero DTE, I don't do those,
No,
but that's
I had
wow,
to stop
that's
myself.
exciting.
Yeah, no, listen, you can make a ton of money on those zero DTs, but you can also lose a ton of money on those. And you know what? I just felt myself like a lot of the time where it's like, wow, I got the move that I wanted, but now my contract, like I'm fighting to get back to, zero rather than looking to make money on some of these that I would take. And it's like, wow. And then I did a little bit of like, back testing and just seeing how one day what difference that would make, and the difference is it's insane. Of course the contracts cost a little bit more, but um you're not going to get as sharp of a knife to your contract as you would on the zero, and then you're not really fighting time as hard. Of course it's only one day, but still compared to zero, if you get the wrong move, and you don't have very good risk management, it's probably not the best move, just based on how fast that thing can move.
Absolutely. And you mentioned something that I want to talk about briefly. It's feedback loop. And that is so important with your portfolio and decision making, is looking at your own portfolio to give you feedback based upon your techniques and your style and your plans. And that's one thing I love about trading, is that you're always learning and you're tweaking every day. It's like every day there's like a new situation. You're always learning, applying your rules and your plans. And it's that feedback loop that's so important. And you have to be very objective with it as well. You need to be accountable, and you have to acknowledge your mistakes. Trading is so raw. It's like you get this automatic feedback immediately. And it's the same time that you get this information from your trades, you're also getting those emotions. So it's just intense. It can get very intense, especially with zero DTE. Gosh, I don't do those.
Yeah, no,
That's
it's
intense.
crazy. I think
So
a
yeah,
lot of
do
people
you?
are moving that way now, which is crazy, but
Wow,
yeah.
it is crazy. Now, do you? What type of options trading do you do? It sounds like you do naked long
Yeah.
calls or long puts. Do you do spreads? You do any options writing?
No, unfortunately I do not do any of that yet. Do I know the overall concept of it? Absolutely. I guess unfortunately, in a sense, my long-term account years ago actually turned into my trading account because of the way that everything turned during COVID. So, and I also didn't have a lot of money, when I was in school and stuff. So I wasn't able to build the long-term position where I can benefit from, putting on covered calls or something like that. So yeah, I'm pretty much just going straight naked options either side. And as I continue to build up my
Yeah.
long-term portfolio, that's something that I definitely want to do in the future.
That's great. I love your attitude. I love it
Yeah.
because we're always learning and we just keep learning new strategies. And that's how it all begins. You start with the long calls and puts, and then you start looking at, maybe the, covered call strategy or selling puts,
Right.
I'm an options writer and I've been doing this for years. So,
Right.
it just takes time. You just study it and then you practice and you just, over time, you just learn all these different techniques. And then you progress on to butterflies. Butterflies are not really that complex as they sound. They're actually really great. It's like two different types of spreads on top of each other.
Right.
So it's really cool. I usually think of it like, a bull put spread. You look at it, a bear call spread and stuff like that. So, and I do love credit spreads, even though the VIX is low right now. I still am more of an options writer.
Mm-hmm.
But I have to tell you, the past few days I've been doing long calls, and those are the positions I closed most of them today. But I did jump into those.
Is
Yeah,
your trade?
I just ride the wave. I was very.
Oh
Hmm?
no, I'm sorry. I was just gonna ask, like, what is the timetable for your options trades? Like, are you
Okay.
going monthly
Oh,
or?
great
Yeah.
question. No, actually, I'm like a dinosaur. I go through. I usually buy. Like I have to admit, I bought March, so I've been
Nice.
playing March. But I usually do when I buy. I have rules.
Mm-hmm.
So I have 3 months plus on calls and puts. So if I go long
Right.
and I buy, I do 3 months plus. Usually, not always, but that's my usual thing. Now, when I sell covered calls or when I sell puts, I usually do, my sweet spot has been 3 weeks to up to 3 months. I usually don't do the same week or 2 weeks. The premium isn't so good, especially with the lower VIX, lower IV. So I've been doing, like right now, I sold covered calls in March. So I didn't do this month because it was just such a low premium.
Right.
So I do sell covered calls extensively. I've actually write about it. I have videos on my website about all types of options training. I do options training as well. And so, yeah, so I sell and I do spreads as well. I do a lot of diagonals and sometimes I do calendars. I do verticals. I've been doing bull put spreads. So I don't have cash secured with the puts.
Right. Right. Right.
And, but all that kind of stuff, I usually, back to your original question, I don't really work with options within the next few weeks.
Right.
I like to give myself time. And I'm not really a leap buyer. I have done it before. I just, in this market, there's too much uncertainty with long term. And even with my investing, I diversify across various asset classes. And I've been doing a lot of T-bills, 4 weeks. I go 4 weeks for liquidity.
Right. Right.
You pay for the liquidity is a risk. So I rather have the 4 weekers over the 17 or 30, I think it's 17 and 34 a week. And so, rates are higher for the short term. So
Right.
they're high. So you're getting over 4% on those. So I rather just go that time period. So remaining liquid and just giving myself time on options. It's just my style and what works for me. And once again, we go back to knowing yourself, right? And what works for you. And I got to tell you, I just have bad luck or something. But when I do a weekly, I don't know. It doesn't work for me.
No,
So I'm
I
just like, you
know.
know what? Why bother?
It's tough, and it's like, it the precision and just the way that they move. It's like, if you're really not exactly precise, you're going to see your contract melt down pretty quickly. That's not to say that it doesn't come back quickly, but oftentimes that's like I'm out, I'm done, I'm not even going to consider looking back at it. And and then you get the move afterwards, and then it just kind of beats down on your confidence. But one point that you made that
Yeah.
I also, similarly to you, like, I have adjusted not only my strategies, but also just the timetables that I was taking on these trades. I mean, I used to be specifically swing trading things, and that kind of stopped working for me. So I made the adjustment and I pivoted towards just scalping. And honestly, I mean, I think that's kind of the way to be in, this type of market where, tomorrow a news headline can come out and completely change the course of your whole game plan. So I've just been super quick with it. Again, I haven't really been, dipping into any serious funds, but, as long as I can make a, certain amount a day, that's more than fine with me, because there's better times ahead. I'm still pretty young, so I got time.
Yeah.
I'm not too worried about it.
Absolutely. There's plenty of opportunity. That's another thing. There's no reason to have fear of missing out. And I always tell my people that. I'm like, it's important just to have patience and know there's plenty of opportunities coming. I think it's Warren Buffett that said there's always another bus coming.
Yep.
And there's always another opportunity. And I've seen this in real estate, and I was a commercial real estate broker for I had my own brokerage years ago. And, even in real estate, they always say you make your money when you buy. And it's very true. And that's why, I have more patience. And I do think there's a possibility of stocks, maybe going lower. There's a chance, there's always a chance for anything. And so I'm not rushing. And even when I saw this momentum, I jumped into some options, and I rode the momentum, but I wasn't, feeling like I had to chase. And I don't think chasing, that's another impulsion that you can have, is to chase. And you can really tell a difference between your impulses versus intuition. And I've been able, I know that with myself. And so when you can feel yourself with that feeling, you want to jump in, but it's like your logical mind says, wait a minute, this has gone way beyond the price point that I wanted.
Right.
So why am I rushing to buy something? And, it's important to be aware of that. So in the past few days, we've been feeling like this like euphoria in the market in a way, and the fundamentals haven't changed. We do have potential earnings recession. We do have, that's just 2 quarters back to back of declining earnings year over year. So margins are compressed. It could happen. If they decide to lower earnings and then they come out and they beat, that's another nice mirage that a lot of companies do. So I just try to look at it very objectively. And, even looking at, where SPX, I think the multiple right now is about 18 or something like that.
Right.
And, I just think that, I like to scale into positions. And I think this is a great way for us to segue into long-term investing.
Yeah.
And we can discuss investing now. I like to scale into my positions over time, and it can take me months, to build a position. And what are you looking for with investing? I know your options, and then also long-term investing.
Right.
What's your plan, and what's your style regarding that? What do you look for?
Yeah. So, I mean, I do have, some positions that I've had since like 2018, when, I don't want to say that I didn't know anything, but when you first get into it, you think, oh, I'm going to buy a share of Apple, a share of Microsoft. Like, so I do have some of those, but one thing that I've been, almost like a trial and error type thing, but I've been dollar cost averaging. One of these brokerages, they allow you to do that. So I said, what, in June, everything was still pretty beat down. And I just started, whatever it was. I think it was like $155 a week or something that would fully max out a Roth account on this brokerage. So I just started doing that, and obviously it went pretty well. I mean, it took some time, but my whole game plan for it was, as long as the S&P is under 400, I'm gonna I'll continue with the whatever 155 a week it was on it, and let it roll. So I got to the point today where, and this goes back to what you're just saying about the FOMO. When I started to continuously trim those positions, I was like, what, if they rip Apple, Google, Amazon tomorrow, and now my size of my position is much less than what it was when I first got going on it, um, you know, then I'm going to be pretty upset, and I try not to rush back into it. But I don't know. I kind of stuck with my gut in that I do think this is going to be a long, drawn out process, and I do think we're going to get better opportunities with time. So I'm okay with it. But I tried
Good for you.
buying like dividends and stuff like that. But like the amount of money that I was putting into them was not nearly, you hear all the Warren Buffett stuff with like Coke and all that. It's like I'm not even moderately close to putting in as much money as him. So, maybe when I'm done with my student loans, I'll do that. But in the meantime, not quite yet.
Absolutely. Well, it sounds like you have a great plan, and that's where it all begins, is the thinking and the planning. And you have time, so you do it over the course of time. They say investing is supposed to be boring, and it really is. When it starts crossing over to being very exciting, then you have to ask yourself, is this gambling?
Right.
So it's over time. And I know I'd like to go over some thinking with the long-term investing. Now, I'm a fundamentalist. I definitely, I believe in, I use charts too. Like I have a whole investing puzzle. I use charts. Technicals are important, moving averages. And I also look at option flow. Option flow is another important criteria that I look at, and sentiment. You look at the macro. Macro is very important. It's the backdrop. It's the liquidity for the market. And we have rate hikes going on, so cost of debt and capital is going up. Now, a lot of these companies, like, here's what happens. There was free money years ago in 2020. Now it's like almost 3 years ago, right? And people keep thinking, and they keep saying that we're going to have a recession based on what the Fed's doing now. And in actuality, it's actually a result of the free money that we had, which caused people to put excess money into riskier assets. And that is actually the precursor to the issues. So those companies that need that constant refinancing to get capital, they're the ones that are going to be challenged right now because we have a higher cost of debt. And so it's those companies that I'm most concerned about. And so when I look at investing, I look at the fundamentals, and free cash flow yield is so important. Cash is king. I know we always hear that, but it's true. And looking at companies, what's really important to me is increasing margins, or at least maintaining margins. It's all about the margins, earnings per share. We're shareholders. It's not just about the net income, it's how much we get per share. So I always look at that. And that was what was concerning today. And we'll talk briefly about the earnings today. Like, let's see, Google earnings per share. I'm looking at it right now. They missed. It was estimated $1.18, came in at $1.05. Amazon was a significant miss. They came in much lower than last year, same quarter, and they missed. It's supposed to be 17 cents, and now it's 3 cents. Their free cash flow went down as well. And then I look at their guidance, and their guidance was a huge window. I think it was 0 to 4 billion or something, and it wasn't so great. So looking into next quarter, which is quarter one, didn't look so good as well. So we have a lot of challenges. And Apple, I think they had their first miss in 5 years, something like that. It was like some or their first earnings miss in 7 years, something dramatic like that.
Ironically, I just
So
saw the price bounce back too. Sorry to interrupt, but yeah, I saw Apple.
Wow, interesting.
Came
Well,
back
see,
from the grave.
it's all about market reaction.
Yep.
So if people are okay with it, maybe they just think, you know what, this is the bottom, this is the bad quarter. And, maybe they're looking forward to the future, saying things are going to get better, this is the worst. Then, yeah, it's ultimately about the market reaction.
Yeah. And
so,
I also think
hey,
of it as
that would be
like,
great.
I also think of it like, at what point do people who aren't as, interested in the market as we are, at what point do they just see a price and they say, oh, wow, that's low, I'm going to buy some? And like that, when does that start to kind of move in? Because, of course that's going to impact when you got, tons of people who are like, oh yeah, I'm going to start my long-term investing at this point, blah, blah, blah. Or people who are just, late to the party in investing. They see something at a price where, they might not be diving into the details as much as, we would, but they see it at a specific price and they say, okay, there's no way it's going to go lower than this. Can it? Of course. But I feel like you could get some people who are late to the party, and even, when was it? We touched like 365 a couple months ago. Like, I feel like a lot of people were just like, oh, wow, it's not going to go lower than this. I'm just going to jump in and go for it. So I don't know. I mean, to me, again, I think that we do end up going back below that 400 mark. I don't know how much lower. I don't know if even if we break lows, but again, for me, it's like, I could just slowly work my way into positions. I'm happy with that.
Yeah, exactly. I mean, I welcome lows. They're actually a positive. I look at challenges as opportunities, and that's how things are in life. You always look for the opportunities amidst the challenges. And so if the market turned down, it's important. I always tell people it's important to remain liquid. And, I always like to, even in a very strong bull market, I always like to have a little cash on the side. And so in this market, I've had a significantly larger cash position than I usually do. And it's important to remain liquid to seize those opportunities. And that's what I did with my business in 2008. I vertically and horizontally integrated when other businesses were folding in my industry. And we ended up not only gaining market share, but we also went into new industries. So now our business, our manufacturing business, is in many industries. And I have to give credit to that downturn in 2008 and 2009, because when the tightening of the belt occurs is when there's actually more opportunities if you look for them. And if you remain savvy enough to be able to seize those opportunities. And I speak about that from experience, but there's opportunities. And even a few weeks ago or back in December, I was saying there's opportunities, and they're coming, and there's also obviously short-term ones as well, and there's long-term. And I just think that there are emerging leaders, and we can find the companies that are not only innovating their technology. And I'm all about growth. I think growth is very important for the future. I like AI.
Totally.
And a lot of the cybersecurity is a great, I've been bullish on cybersecurity. If you look at my tweets since like the beginning of time, I'm always talking about the basket. Zscaler is one of my favorites. I love them. Palo Alto, I think, is like the best in that section. I love that great cash flow. Their free cash flow last earnings was beautiful. And I actually did a video on my website about Palo Alto. And I have Fortinet. I think it's a great company, and CrowdStrike as well. And so I love talking about stocks, by the way, if you can
Yeah,
tell.
no,
And
absolutely.
I just love talking about companies. They're great.
I'm
And
totally with you on that,
cybersecurity,
though. Like
yeah,
the
I love
innovation of things, like
cybersecurity.
one thing, well, yeah,
Yeah.
cybersecurity for sure, but like in terms of innovation in itself, like,
Mhm.
of course, for me, it's like, what do I think is going to be around when I'm 60 years old? Like, that's something, of course, that I think about. But in terms of like innovation and stuff, like there are some companies who are doing some wacky things, but to me, it's like you're they're doing something to be innovative. I mean, like and you talk about growth and everything like that. Like, they might be trying to go to another metaverse or something like that, but like they're trying to do something. I mean, they might not have the best fundamentals and everything at this point, but I like companies like Meta and stuff like that just because they're actually giving it a shot. I mean, with Apple, I'm sorry, I don't see many differences in my iPhone every year. I get the same laptop. Like, I want something new, and it might be crazy, but I'm totally open to all of these quote unquote crazy ideas that eventually come to light. I mean, this Chat GPT is crazy. You see Microsoft put 10 billion into them. Like, those types of things definitely get me interested, at least.
I love it. We're calling you out, Apple.
Yeah,
Apple, you
no.
better shape up, and you better innovate,
But
because
that's
you
the
can't
thing.
just sit on that iPhone. We
Does
need something new.
does Apple turn into like this generation's like Walmart or something like that, where it's like, yes, it's a necessity. Like, everybody's got a phone, everybody's got a computer. They got that on lock, but like where they kind of just simmer down. I don't know. Like, and it's more of like a dividend stock or something like that. I mean, Warren Buffett, he's got a ton of shares of Apple too, and Berkby. So like,
Yeah, I
it's like,
love
I
it.
don't know.
Uh-huh. I love your thinking, Mando.
Yeah,
You know,
thanks.
you're right. I think you're going to go far. You're doing great. I love the way you're thinking out of the box, and I agree with you. It's a great point you make about Apple. It's almost like they're the king of stocks, so they just think, you know what, we're at the top. We've made it. We don't have anything else to prove. So, I think Microsoft's doing great. I like how they
Yes.
invested in Chat GPT, and I like Microsoft a lot. I think
too.
they're a solid, great company, and it's funny. Amazon back in the day, they were known as different, as weird. People were very, I remember back in 2000 and that whole time period, and they were very out of the box, and people took a chance with them.
Right.
And look at them now. They're the everything store.
Mhm.
And, it's the same thing with, I got to tell you, I love that you mentioned metaverse. And I agree. I like what Facebook went and they changed, they reallocated, they restructured, and they became Meta.
Right.
And I think that took a big chance, and they're really positioning themselves for what's coming. And I do find NFTs fascinating,
Mhm.
and I'm looking at actually diversifying and starting a business in that field as well. That's
Nice.
something in the near term. And actually, my husband, who's an attorney, and he's actually going to be doing crypto law and focus on all that. And he's going to be doing smart contracts. He's a contract attorney.
That's
So
awesome.
he's going to be focusing on smart contracts. So yeah, it's really, really fascinating stuff. And NFT royalties are going to be more of my focus.
Yeah, yeah.
And so it's passive income. So I love the whole, blockchain and the whole crypto. It's coming, and it's going to be more commonplace than people realize.
Yep.
So right now we're in a tough bearish market. I don't want to use labeling, but but I do think that now's the time when people are building and they're getting ready for what's to come. And I do think that if you were to ask me my opinion, and of course I don't make predictions, but we could be in this range bound, grinding kind of market. I know we had a great past few days, but
Right.
this could last into this year, next year, maybe, maybe next year, maybe even 2025, who knows?
Right.
But a lot of people, a lot of economists are saying that. And I just met with on my podcast an economist, amazing economist, Daniel Lacalle, a PhD, and he's in Madrid. And his opinion, which I value very much, was that this could definitely take a couple years. So, because it's global. I mean, the inflation is a global challenge, and the slow growth is significant.
Right. It's not
And
just happening
so,
here.
yeah. So what I say is keep a positive mind always. Keep building. Keep learning. This is your time to keep learning. Learn about your spreads. Learn about writing options. Whatever you want to do, and just keep planning for the future, because the future will get brighter, and there will be. It will get better, and just some difficult times right now, but these are good. They're good for growth, and meaning personal growth, and businesses as well. I speak about business like people, because I've been in business since college, and I've never had a boss. I've always been an entrepreneur,
Best way to be.
and I started out with real estate. Yeah, exactly. And it was tough. Look, being an entrepreneur is very tough, but it's very rewarding. And so I look at things like from a micro perspective as well as macro. And when talking about long-term winners, I just want to go back to that topic. I not only look at the financials, because financials are important. I know it's about market reaction. And look, these are big companies. Apple, I don't think Apple, Amazon, Google, none of them are going to go out of business, in my opinion. I mean, I'm not, a few numbers here and there. They're great companies. They really are. But when we talk about financials for emerging leaders, and maybe startups, and you go into the other side, very important to find companies that have the cash flow, that aren't relying on that constant refinancing. So you want to look at um, companies that have increasing earnings and margins, but also strategically. Now, like CrowdStrike, I love what they're doing strategically. They have a lot of great things going on there. Now, their valuation isn't as high, isn't as good as other companies in that space, but what they're doing as a company, it's very innovative. I love their products. And so to me, they're an example of a great company doing great things strategically. So we got to look at more than just the numbers. And I like to look at how they streamline their business processes too, the restructuring right now that's going on. And, and when they gain market share through acquisitions and mergers, that's very interesting. And that's how they grow as well. It's an inorganic growth. So there's just so many interesting facts. We could talk about businesses all day, but let's focus on risk management.
Sure.
Okay, I think that's a very important topic. At this stage in my life, I'm more about wealth preservation. And so risk management is very important, but I think it's important for everyone at all stages. How do you view it and how do you utilize it in your trading and
Yeah,
investing?
no, I mean it is totally kind of really changed over time. I will definitely say that. Like I said before, whether it was lucky or, whatever, but I came into some good money during all those COVID dips that I had. I mean, I was holding El Dorado. It's not even it got bought out by Caesars. That was like, I bought it at like $10. It ended up going over $80. And I think like the the young and dumb where nowadays I would not nearly hold that as long as what I would have now. I'm much more risk averse, just based on I did do well for myself, and now I want to be able to pay myself weekly and continue to live the lifestyle I do. So I am like, again, I'm not trying to make $30,000 in a day trading, and that's just not me. It's no interest really. I would prefer not to risk that much money in something like that. I mean, I'm only a couple years out of school. I want to make sure I have all of that stuff paid off, and then maybe from there we can look at it again. But in terms of risk management when I'm trading, like I said before, my strategy that I use has almost incorporated like a well-defined you know entry, exit, stops, and profit zones. So the way that I look at it now is, and even now I still see myself like I'll be 3/4 of the way to my take profit, and I find myself pulling the plug on it early just because I want to secure my money rather than potentially catch one of those candles where it goes against you and then all your profits are gone. That work that you just did preparing for that trade and managing it, staring at the screen for however long the trade took. um I still find myself pulling it a little early, and so when it goes down to the profit, of course I leave money on the table. But I think I'm at a point where it's okay as long as I live to see another day. I can and then play with whatever I had made off that trade, and maybe next time around I will you know, maybe buy an extra contract. And with that extra contract, I cut one of them, take profits off there, and maybe let that second one run, or, whatever it may be. But yeah, I'm really not the risky type of person. I have no interest in being the guy to post about the money that I made or anything like that. Like, to me, that doesn't help anybody. I actually think Twitter is kind of poison in a sense, where people get really false direction, I guess you could say. Like, people think, oh wow, this guy made this much money today, like that could be me. And then it might not be the right time for them to be putting on trades like that, or they kind of get sucked in and then they get hurt by it. So for me, it's just not worth it. If you have questions about anything, feel free to reach out, and if I know it, I got you. If not, I'll reach out to somebody like Rosanna who knows it, and I can get back to you on that. But um you know, again, I'm just not like a very risky type of person by any means. I guess looking back on, what I did when I first got going, that was pretty risky, but it worked out, and now I'm not giving it back. Don't plan on going back to work anytime soon. I'm very happy with where I'm at, so I gotta keep that lifestyle active.
I love it. And you learn young, and I think that's wonderful. It's so important not to get taken away with all that. I love Nassim Taleb. I don't know if you know him. He wrote Anti-Fragile, Black Swan. He's amazing, and he's a statistician. He's a PhD. He's amazing, and he just talks about in his books about how people blow up, and it's always the ones who live on the edge. And usually, I'm going to say, oh, I don't like the word always, usually. And being risk averse, like you say, and not as risk seeking, is good. It's positive. It's the consistency, consistent small wins. And like the turtle wins the race. And if you look at the people who have lasted the longest in this field, it's usually those that keep going at it, and just be consistent. When you go for those home runs, it works both ways. And you get struck out, and you can strike out huge. So it's important just to be cautious and be cognizant, as you are at such a young age, Mando, of all that. And I agree with you completely. And I say this all the time, social media, not just Twitter, people show only the sides of them they want others to see. Now, I'm older than you, so I'm going to speak about Facebook. Facebook is like a dinosaur social media app for the younger generation.
The first one I used.
But in Facebook, yeah,
School,
okay.
2009,
Well,
when I first
yeah,
got into high school.
Oh, wow, high school.
Yeah.
Cool.
Yep.
Well, they always say the people who always look like they're smiling and always so happy, it to me is analogous to people flashing gains on Twitter. So are they really happy in real life? We don't know, but there's been research done about it. And they say that the ones that flash these things have a lot of the other side as well, but they don't show all of it. So the same thing goes with the gains. And they flash all these gains, but you don't see the losses.
Right.
So with all these gains, there's are losses there, because losses happen. I'll admit it. I take losses,
Every day.
We all take losses.
Every day.
Yeah. It's all part of the process. If you're not willing to take a risk, then you're not going to get the reward. And losses happen. Right. So don't get taken away and just ignore the noise. And a lot of times when you see all those gains being flashed, that causes fear of missing out as well. Okay. So it's important to put your blinders on and just stay your course. Follow your plan. I know you sound like a boring person, but you know what? They're the ones that succeed. And it's important just to focus on yourself and not get so taken by all that's going on around you, and just, focus on your plan and your strategy. And I think what you're doing, Mando, sounds great.
Right. No, I mean, what I think it is also, it's I think you should absolutely celebrate, your success and everything like that. I just think it's a little skewed now with how, people blow up on Twitter and stuff like that, where it's it's not almost like a journal where you're using it to, yeah, look, I made this sick. It's almost like people are seeking for others to be like, oh, how did you do this, that, you know what I mean? So it's I think it's just not the right motive in a sense. And that's why I've been trial and error in everything, in terms of trading, social media, whatever it is. At one point I thought it was cool, and then I thought about it, I'm just first off, no one even knows who I am, so one, who cares? Two, it actually is, people who might just be getting into the mix, they might get really you know a bad understanding of how difficult this could be. I mean, it's not always easy to make all this money and stuff like that. So I don't know. I just think it's kind of a disservice to the people that are, following, if you're going to just, flaunt all the money and then, look for them to buy your stuff or something like that. I don't know. It's just not for me, really.
I love that. Well, I admire you. I think that you're very honest and transparent, and that's so important. That's so valuable on here, to meet other people like you. And I'm so glad we had this space together, Mando.
Absolutely,
we met through a mutual friend, Ryan, who's also a really great person and honest and direct. And I'm the same way. Yeah, absolutely. I'm the same way. And that, I don't think I ever flash anything. I don't believe in that. I try to avoid it. People ask and they always try to taunt you to show things. And I try to keep things private because I don't think it's fair to other people and in how it may make them feel, whether losses or wins. It's just, there's just certain things. There's nothing good that comes out of it. And, my purpose here is to help others and hopefully to share experiences. And, mistakes and failures are part of the process. And anyone who tells you it's not is just plain lying.
Yep.
And, we all have lost and it sucks. It hurts. It's painful. But, we have to deal with it and it's part of life. Success is not about not failing or falling down. It's about picking yourself up after you fall down and going forward again and again. And, I don't know if you're familiar. Our three sons are chess competitors,
nice.
and losses are part of the process. Thanks. And I post about them sometimes, but they've all traveled. They were professional chess players for a while, and they learned that. And we used to play Rocky. Rocky is awesome, and there's this great clip. I may even retweet it tonight if I after a little later. But it's basically, he says it's not about how hard you hit, it's about how hard you can get hit and keep moving forward. And that's how I see, that's how life is, and that's how trading is. And trading is so like symbolic of life. It's so, like I said before, it's very raw, and you get punished right away. Especially with zero DTE, which I don't do. But you get punished right away, and it's it's hard. Sometimes you need time to just recover. And I always tell people that it's better you take the time and recover than go right back into it with that emotion attached to it and react. So I'm it's just,
I mean, for me, like,
absolutely.
I almost view like this, trading life for me is almost like a redemption arc. Like, I played baseball my whole life. I played through college. After college, I still play now. It didn't really end out the way I wanted it to. And I truly believe it had nothing to do with my physical abilities. It was really the mentality that I had. And I think, towards the end for me, it ate me alive. And that's what prevented me from, excelling further. And I'm not going to let it happen again. I'm not going to let my mind, kind of pull me down. And that's why I do my best, and I really focused on ways that I can, flush bad days. They're going to happen, and, just kind of own them rather than make excuses, because excuses, I see it all the time. But an excuse on anything, you make an error in baseball. Oh yeah, the field, it was bad. It made a bad hop, or I made a bad throw. Yeah, my arm hurts. Like, you always just look for the excuse, but in reality, you just have to own it. And I think since I've really focused on just owning mistakes, stupid decisions, whatever, I think things have seriously changed for me, because I understand it's just a part of life, and losing, it sucks, but it's gonna happen.
I love that. You got to own it.
Yep.
Agree completely. It's about how resilient you can be. And actually, I even say one step further is using that adversity to empower you to come back even stronger. You take that pain, that loss, and you use it as fuel to fire you up and get yourself back up to come back even stronger and better.
Yep.
And let me tell you, it's taken me many years. When I was back in high school, I used to be a debater. And, those losses were hard. You go to nationals. I even went to states once. And I remember it's just, you were right there at the end. And I went over on time. I spoke, surprise, everyone. I spoke too long,
I'm the same
and I
way.
actually went over. I got this, yeah, right. I got to squat. I was doing Lincoln Douglas debate, and this is back in high school. And I remember, because this relates to your story, because I remember I had a great argument. I was winning the debate, and I had all these great points, and I countered every one of them, and I didn't drop any point. And I went over by like 20 seconds, and automatically a disqualification. And I was so crushed.
Yeah.
And I almost wanted to quit debate. I was so upset. And, it's about, like you said, like in baseball, like It's about being resilient and being able to cope on those down days. And that's how far you go in a field, is how you're able to cope when you fall, when you fail, because those failures, those mistakes always happen. But being able to deal with that, you go far. And Mando, I think you're going to go far in this. I think you're awesome.
Thank you.
I'm so
Appreciate
happy
it.
that we met up tonight. Absolutely.
Yeah, for sure.
And, you
Anytime.
know,
Thanks for having me.
yeah, absolutely. And is there anything else you wanted to add that I probably missed? I know I talk a lot, but is there anything else
No, I mean,
you want to add to everyone?
I think, all, obviously you do a great job, and I was super impressed with your website. I was doing some DD myself, and I was like, dang, her website is sweet. But yeah, no, Rosanna, Captain Mara, Ryan over here, you guys are awesome. I'm glad we connected on here, and I talk to Ryan all the time. It's funny, we talk in the DMs, and when was it, a couple nights ago was the first time I ever heard his voice. I was like, oh, that's what he sounds like. But no, great guy, very knowledgeable, and yeah, no, I appreciate it again.
Awesome. So happy. I just like to add with a few points, just to, if I could help anyone else, just guiding anyone with the market and life. It's important to remain flexible. And that we've seen lately, all this talk about the bearish macro and all the inflation rate hikes, but the market ran. So it's all about being flexible and just keeping an open mind. And, and that's key. So I just want to end on that note. I wish everyone a wonderful, wonderful evening. It's been such a pleasure meeting you, Mando. And thank you to all the listeners for being here. We appreciate you all so much.
All right. Thanks again, guys.
Thank you.
Yep. Talk soon.
Take care. Bye-bye.
Thank you for listening to the Rose Show podcast. Please visit rosannaprestia.com for more episodes. See you soon.